Hi guys and welcome back to Margin Call Gang, where I try to grow a small account or die trying. And it was an exciting week. We played credit spreads for the first time, so we are officially a part of Theta Gang. We also got returns of 5% this week, which is a pretty chad return if you ask me. We traded Baba, Tesla, Triple Q, Gold, Swixy, the Euro, the Yen, just to name a few. I'll go through all the trades and the plans and setups for next week. But let's go through the week's catalysts and news first. And remember, this is not financial advice. And the biggest catalyst was the CPI on Tuesday. Everyone and their mother was expecting it to come down, but they all missed the mark. And this caused major drawdowns in the market, the biggest daily drop since 2020. The next up is the yen. The yen had been on a free fall since Bank of Japan started buying their bonds to weaken the currency. But this massive drop did require a check from the Bank of Japan, and there might be some intervention, though nothing further has been said so far. And on Thursday, we got some economic data from the United States. Retail sales and unemployment claims both came in better than expected, but this good news turned out to be bad for the market, as it just paves the way for the Federal Reserve to tighten monetary policy further after a bigger than expected inflation report. Fed futures were already pricing in a 75 basis point increase, and now some are even expecting a 100 basis point increase. And a bigger than expected raise will just help make the October crash I was expecting come in earlier, so let's see. Lastly, US railway employees were threatening a strike, and this pushed some of the commodity prices up and also ruined my short oil trade. Though everything is back to normal for now, as this disaster has been averted. So let's get into last week's trades and see how I made the profits. Now, the first order of the week was to close Swixy on Monday. I had bought around 15 shares of the short volatility index futures last week, right around here, because I expected last week to be low on volatility with not too much news and the calm before the upcoming CPI storm. Now, I was expecting huge volatility the next day due to inflation, so it only made sense not to be short volatility, and I closed it before it hit my take profit right about here, giving me a profit of $18. The very same day, I shorted the Euro USD pair. The euro had been falling for quite some time, and the rate increase on Thursday from the ECB didn't help its case. So I set out to short the euro here with a good margin for the stop loss. However, the very next day, the euro had a climb and pierced my mental stop loss. With the CPI report just a few minutes away, I decided to wait and see rather than close at my stop loss. A bad CPI reading would just maybe turn the euro around. And that's exactly what happened. The euro fell harder than anything, giving me a profit of $87. Thank God I waited for the inflation reading prior to closing the euro short. A very favorite retail trader name, Tesla. As promised last week, I would short Tesla if the CPI reading tanked the market, and I did just that. However, the next day there was a relief rally of 1% to compensate for the huge 5% drop from the day before, and sadly stopped me out with an L of $23. For some reason, us Tesla bears just keep losing out to Elon. Now, I'll go through three very mundane trades. I'd bought URA last week, the trade didn't go my way, so I closed it, though I'm still bullish on uranium. Then XOP pierced my stop loss due to the railway strike threat, so I closed it, though I'm still bearish on oil. Then I played a small lot of Euro USD as a small bull run to relieve the drop. That didn't go my way, so I closed it. Next up is spot gold. Many of you would have noticed this trusty downward channel that gold has been on. With no positive catalyst left for the market on Thursday, I decided to short gold till the bottom of the channel, shorting at 1683 to the bottom at 1667 the next day. I shorted only 1 ounce instead of my usual 2, as I had taken a streak of losses and had to downsize for money management purposes. This yielded me a small profit of $16. To the options now. First up is the mega gamble. It was a blind trade without looking at the charts. It was being a degenerate at his best. I simply bought a Netflix weekly put at strike for 232.5 for $201 and put a limit sell for a profit of $12. I was sure the way options are volatile, it would easily get filled and bag me $12. If not, I would lose $200. Now this is an insane risk to reward ratio, but a gambler's got to gamble. off, I did two extremely conservative weekly bear credit spreads on Baba and Netflix. Now, I won't get into the mechanics of credit spreads as they're still pretty new to me, but I enjoyed making money on time decay. For a change, I made money on theta instead of losing my premium to it. I had left enough margin on the bear spreads to keep it safe and made sure to close them out before Friday, as Friday was quad witching, and I wanted to stay safe. There was enough margin for me to make money on Netflix despite its bull run after the ad revenue announcement. To recap, this is what my week looked like. Now, some might say that this is overtrading, but out of all the addictions known to mankind, trading might be the strongest for us degenerates. We need to keep chasing the next play, and it has the power to leave us destitute. I'm gonna keep next week pretty simple. The S&P has made a clean break below the wedge, but I'm not taking any trades till the Fed meeting. 100 basis increase means to load up on shorts. A 75 basis point hike might just mean a small relief before further downside. So let's wait and watch. I do want to take another downside trade on the XOP. But before that, I'm going to wait for the API crude inventory report and set my stop loss accordingly. Thank you guys, and see you next week.